Hey, in some cases, you may notice the margin of safety says 0%, while the share price is one number and the fair value is a different number. So this video will help explain that. Let's dive in. Okay, so looking at my screen, you can see we're using Coinbase in this example. Margin of safety is 0%, while the share price is 64.67 and the fair value is 66.34, so different numbers. Obviously, that's not really a 0% margin of safety. So let's go a little further. I have this little calculator here to show what the real percentage is. If you put in the share price 64.67, fair value of 66.34, you actually get a margin of safety of 2.52%. What that means is 64.67 is 2.52% off 66.34. Now, the reason this is happening within Ticker, and you probably, if you have read our calculation section, we have a regression algorithm we use in the platform. What that means in simple terms is we like to look at 4 years of data on all the important numbers from the income statement, cash flow statement, and balance sheet. Some of those numbers include revenue, net income, EPS, and list goes on. I won't give them all here. But in some cases, stocks haven't been around that long. They've been around maybe maybe 3 or 4 quarters, and that's all we can get. So the regression algorithm, it kind of evens the playing field between all stocks, whether if it's a stock like Microsoft or Apple that's been public for over 30 years, or if it's a new stock that went public this last year. Evens the playing field, looks at a minimum of 3 quarters or maximum of the 4 years. And what happens is with this regression algorithm, anything that's less than 30% margin of safety, it defaults to 0 no matter what. It's just how the regression works. I want to show you something else here that'll give a little more context, and you're welcome to add the same filter and Ticker on your own. So check this out. I added a filter here, just margin of safety, 0 to 30%, and then US stocks. And you can see here at the very bottom, you can see 3,600 approximately stocks. And if you go to the top, you can see what happens. You got 30%, 30%, and then all of a sudden, the numbers start changing to 0. So pretty much you're not going to see these margin of safeties between let's say 1 and 29%. Anything that falls below that 30% defaults to 0. Now, at the end of the day, we are looking for stocks that are on sale. And this, we have to give Warren Buffett, Charlie Munger, Ben Graham, and Phil Town credit on this. We want to look for stocks that have a margin of safety of 50% or greater. So no matter if a stock is 35%, 33%, 30%, or 0%, it's still less than the margin of safety we're looking for. So hopefully that gives you a little context on what's going on. If you are interested, because we are open source, we truly believe in the importance of that. You can read the calculations as one step, but if you wanted to learn a little bit more about a regression algorithm, totally welcome to set up a Zoom call, and we can talk about it a little further. All right, we'll talk to you soon.